Hey guys, what's up? I'm Erin and welcome back to the channel. So glad to have you. Now, have you ever heard someone say investing in the stock market is just like gambling? I swear someone says that to me at least once a month. Yes, there are areas where gambling and investing overlap, namely in the areas of risk and choice. But just because they touch on the same elements does not mean that they are the same activities at all. There are definitive distinctions between gambling and investing. Yes, people can turn buying stocks into gambling, and I'll touch on how that happens in just a bit. But before we get into it, let's find out exactly what investing is and what gambling is. Investing is allocating funds to a specific asset, like a stock, with the hope of generating future income or future profits. Income comes in the form of dividend payments, and a company will announce a dividend when they want to share their profits with the owners or the shareholders, so all the stockholders. Profit will also come when the value of the stock increases in the marketplace. When that happens, the value of your investment has increased. However, when it comes to gambling, that is risking money on an event with an uncertain outcome, because you have no idea which team is going to win the game, which horse is going to win the race, or which card is going to be dealt. First and foremost, investing allows you to select your level of risk. On one hand, you have stocks, which are notoriously more risky but offer the highest growth potential. Then a step below that, we have bonds, which are less risky and offer less growth potential. And even below that, we have T-bills or high-yield savings accounts, which are essentially zero risk, but they offer the least growth potential. A prudent and a wise investor will use all three of these asset classes to build a portfolio that suits their individual risk tolerance. Gambling, however, is a zero-sum game, and the odds are stacked against you. There is a winner and there is a loser, and there is no in between. Gambling is transferring money from the loser to the winner. The risk is big and the odds are against you. Investing, however, is not a zero-sum game. It's not that your money will increase or go to zero. You could make 10% on your money, you could make 5% or 3%, or perhaps the market has been experiencing some turbulence and your return is negative. But it's not that your money went to zero, it's just that it took a dip. If you give the markets enough time, markets do rebound, and as long as you are broadly diversified, the market will come back up and the value of your investment will increase. The odds are stacked in your favor when it comes to investing. Also, investing is a win-win game, because as the company does well, so do the investors, so everyone does well together. Next up, the time horizons for investing and gambling are very different. Generally, investors have a very long time horizon. People who invest in the stock market do so for decades and decades on end. And time is your best friend, as we know with the stock market. The earlier you start, the higher your money can grow and the more it can compound upon itself. And also, if the market does experience somewhat of a dip or a negative downturn, time is what allows the market to turn around and go up, because the markets do go up long term. That is what history has taught us. Gambling, however, has a very short time frame. The gamble is over the minute the dice are rolled or the minute you pull that lever. The gamble is done and you risked it all. Now, when it comes to investing, when it's holding stocks, that actually represents ownership in a company. That's what a stock is, stock in a company. A lot of times people get so caught up in the idea of buying and selling stocks, just looking at a number going up and down, that they forget that it is actually owning a piece of a company. And as such, before you buy or sell, you should do your due diligence and your research, because the more you research, the more you can mitigate your risk. You can look into the company's financials, which are all a matter of public record. You can research the management team and see what their values and their goals are. You can assess the company's overall position in the marketplace. When it comes to gambling, you can't do any of this. There is no quantifiable information. Yes, someone can say that that table is hot or that machine is hot, but that doesn't give you anything to measure and anything to really go on. That's just gut feeling. Also, when it comes to gambling, you don't own anything whatsoever. That's where investing has a huge leg up. It literally is an ownership. Now, with investing, you can further mitigate your risk by having a well-diversified portfolio. Yes, owning one or two stocks is inherently risky because a company can go out of business, or it can become obsolete or fall out of favor in the marketplace, or any number of things. However, if you literally own hundreds or thousands of companies, say by owning an index fund, you're essentially betting on the entire economy as a whole. And the odds of an entire economy going under are pretty much slim to none. When it comes to gambling, there is no way to diversify to mitigate your risk. Yes, you can buy more than one lotto ticket, but that's not diversification. In the end of the day, there will only be 6 numbers drawn, and you either have them or you don't. Now, investing can quickly turn into gambling, or at the very least speculation, when people start to buy stocks on a whim. Say someone told them that it was the next hot stock, or they just simply had a gut feeling. When you properly research a company and assess whether it fits with your overall investment strategy or your overall portfolio, that is investing. But a lot of people don't have the time or simply just don't want to do the research necessary to properly vet a company. But look at it this way. If your neighbor came knocking on your door and asked for an investment in his new business, of course you would have questions. Of course you would do your research. That's what investing is. Investing is buying a piece of a company, getting ownership in exchange for your hard-earned money. If you are buying individual stocks, you need to do your due diligence. If you don't want to do heaps of analysis and you don't want to spend your time doing all this research, simply buy an index. It's much easier and it doesn't require all the work on your part because you're buying an index of literally hundreds of thousands of stocks, so the risk is mitigated for you. Investing and gambling are fundamentally different things. When it comes to investing, you get to choose your risk exposure, how much risk you're willing to accept. Not to mention that investing actually represents ownership in a company that will share its profits with you. Gambling is a game of winners and losers. They have the saying, the house always wins for a reason. The odds are stacked against you. You risk it all and the chances are you will come out with nothing. In the long term, when it comes to investing, the markets go up, so the odds are stacked in your favor. If you stay invested, the market will increase and so too will your net worth. So I hope you guys learned that investing and gambling are very different things. When someone tells you that investing in the stock market is the same as gambling, just know that they don't truly understand what investing in the stock market entails. It is ownership. So I hope you get to investing, leave your money there, let it grow for many years to come. Also, please hit that like button before you go. Hope you guys have a great day and I will see you soon. I post new videos every Monday and Friday. Have a good one. Bye.